Well, the Australian dollar is pushing on above 66 US cents because the American currency fell over the weekend after April employment data were weaker than expected. 175,000 jobs versus 240,000 that were expected. And unemployment in the US ticked up from 3.8 to 3.9%, so more chance of a rate cut. As for Australia, the betting for this year is all about a rate hike, not a cut. Tonight, the Reserve Bank Board is halfway through a two-day meeting, and according to the market, it's a 5% chance of announcing a hike at 2:30 tomorrow afternoon, but that rises to 40% in August. The share market closed 0.7% higher, with Westpac the biggest rise among the leaders after announcing a special dividend of 15 cents a share, on top of the normal 75-cent payout, even though profit fell 16% in the first half. Investors in Telstra weren't too bothered about the appointment of NBN boss Stephen Rue as chief executive of Optus, but there was a nasty motorhome prang in a side street when Kiwi RV firm Tourism Holdings lowered profit guidance a lot. There was a 36% dent in its price. The US market jumped 1.3% on Friday because that weak jobs report raised the odds of a rate cut, and on commodity markets, oil fell 1.5%, while copper went up about the same. It looks like the cocoa bubble has burst, which will be a relief for anxious chocolate lovers the world over who have been anxiously munching chocolate and getting more anxious about the price and then munching more. And we seem to be having a Porsche bubble, at least in Australia. Sales of new Porsches are a record high, so there might be a cost of living crisis, but it's all right for some. And that's finance.